Hey guys, today I want to explore how I would invest £30,000 in my 30s. Now, if you're outside of that age range, of course, you will learn a lot from today's video as well. For those who are new to our channel, my name is Ken of the Humble Penny and Financial Joy Academy. I'm also a Sunday Times best-selling author of this book titled Financial Joy with my wife Mary. Financial Joy is a 10-week plan to help you banish debt, grow your money, and unlock financial freedom. I'll put a link to it below and above for you to check it out if you'd love to. Today's video is sponsored by XTB, and I'll be talking to you later on today's video about their various investment plans. But before we actually dive in, I wanted to explain that this video will be split across 3 different parts. So part 1, I'll be looking at 2 different groups of people that I see in their 30s. Part 2, I'll be looking at what I'd consider first of all before I go ahead trying to invest my money. And then part 3, I'll look at around 7 different assets that I would consider if I had £30,000 and if I was, fortunate enough to be in my 30s and about to invest my money. Yeah? If that sounds good to you, today's going to be a really relaxed video. I'd love for you to hit that like button. And whilst you're there, do please hit the subscribe button. Even if you think you subscribe, please check, do subscribe and share some support to the channel. All right, we're gonna make this fun, right? I've made my little board. This is part 1 of the video, and I kind of want to just talk about 2 groups of people that I see, hopefully not seeing a bit of glare there. So 2 groups of people I see in their 30s. So you got the early savers and the midlife accumulators. Now, I would approach investing slightly different depending on where you might be on the journey, right? So early savers are people who are in their early 30s, as I say there. Now, these guys, what I'd be doing at this stage of life would be focusing on, number 1, trying to understand, first of all, what sort of account I should be trying to invest my money into, just trying to get a sense for what the various account types are, pensions, ISAs, and if you're outside the UK, obviously the equivalent to that and that sort of thing. But also just getting a sense for what sort of assets I might want to invest my money into and why, So we'll be talking about that in part 3 of today's video. The second thing I'd be looking at here in this stage of life is building the right habits and behaviors that will mean that I'm able to save a certain amount consistently in my life, and then I'm able to put in place, keep those behaviors in place to make sure that I'm investing a set amount in my life. I'd be aiming to invest at least 15% of my net income if I was in my, early 30s as a minimum. But of course, I understand that not everybody's able to do that because they have different circumstances that are going on. Then the third thing I'd say here is the asset allocation. If I was in my early 30s as an early saver, what I'd be doing is aiming for at least 80% of my money to be invested in equities and 20% potentially to be invested in bonds. But knowing my personality, I'd put 100% personally into stocks because I'd have potentially decades down the line for my money to be at work for me. Okay, this is for my investable funds. Okay. Second group are the midlife accumulators. These guys are in their mid-30s and will carry on, into their early 50s and so on. Now, at this stage of life, they have a strong earnings potential. They're starting to really work on their careers and will be earning the most money in their lives from their mid-30s onwards. As I said, on to early 50s potentially, but they have the challenge that taxes will be a big concern for them at this stage of life. So they'll be exploring different ways to potentially minimize their taxes, looking for ways to invest tax efficiently and legally, obviously, right? And now also at this stage of life, what I'd be considering here is my future income earning years. So for example, if you think you've got another 20 years ahead of you as an earnings potential, I'd be prudent and assume it's 15 years, for example. Therefore, almost forcing you to make sure that more of your money is being invested and as early as possible so that compounding can then work for you over time. Yeah. So those are almost part 1 of the video, the introduction to the 2 types of people. Now, before moving on to part 2 of the video, I want to pause for a moment to thank the sponsors of today's video. Now, passive investing is a low-cost approach to investing in the stock market using index funds and exchange-traded funds or ETFs in order to give you the market's return. XTB is a well-known online investment platform that offers stock and other investing services, and they are regulated by the FCA. They have launched investment plans to help you design a personalized portfolio of ETFs that align with your risk tolerance. And here's the best bit, all for 0% commissions and zero management fees up to the monthly investment volume of €100,000. Once this limit is exceeded, a commission of only 0.2% is applied on a minimum of only £10.
Wow. You can invest in over 350 ETFs, including ones that track the S&P 500. XTB also offers 5.2% interest on uninvested funds and have just increased the interest rate on client funds to 5.2%. Create your account by clicking on the description link below to start investing today.
Well, now, I want to now explore things I would consider when it comes to actually then investing my money. The very first one is assessing financial foundation. So, yay, you have got to your 30s. You know, for some people, that's great news. For some people, there's a lot of anxiety tied to being in your 30s. But I'd say personally, as someone who's now in my, I'm 40 years old now, I'd say congrats to you that you're in your 30s, and that's really, really good. At this stage of life, I'd expect that you would have laid some financial foundations. What do I mean by that here? Established yourself an emergency fund. You are paying off any high interest debt, for example, and maybe you would have started contributing quite seriously into retirement accounts. Now, if you haven't done these things, it's okay because it's not too late to get started. That's the first thing. Second thing is I'd be establishing some clear financial goals at this stage. Yeah, it's crucial to set clear financial goals, and the goals could be: do you want to buy a house? Do you want to start a business? Do you want to travel the world? Or is it a combination of those? Whatever it is, as long as you have a vision for where you want to get to, this will help to then begin to guide what your investing decisions might look like. Right, the third thing I'd consider is the balance between risk and returns. Now, risk is very important in your 30s specifically. And the reason for that is because, as I mentioned earlier, they're really broadly around two types of people at this stage of life. And life is starting to get serious potentially in your 30s. You might have certain responsibilities that you're considering. For example, your career, right? For example, you might be considering starting a family. You might even be taking on a mortgage and so on. This means you need to find a delicate balance between the level of risk you're prepared to take and the sort of returns you're expecting for your money. This also means that, you can't just randomly put all your money, for example, into cryptocurrencies because, it might not work out for you in the way that you might expect. So balancing risk and return is important at this stage of life. Next is, looking here at my notes, is maximizing tax advantaged accounts. Now, one of the smartest moves you can make in your 30s is to make sure you're investing your money properly in the right accounts. In the UK, for example, we have our ISAs, individual savings accounts. In the US, you have your IRAs, for example, and other tax advantage accounts you might want to consider. But in the UK, you want to make sure you're using up all those allowances ideally, or at least trying to use up as much of it as you can to make sure that your money is being invested as tax efficiently as possible. It might be that you combine a stocks and shares ISA with a lifetime ISA, trying to maximize, using up all those allowances in a year. So that's a key thing to consider. The fifth and final thing I'd consider is diversification is absolutely key at this stage of life. So spreading your money across different asset classes would be important potentially, looking at stocks, bonds, and so on. And I'll be covering what those assets are in part 3 of today's video. So, given we've covered those things that you might want to consider as you go on this journey of investing your £30,000, I now want to spend some time looking at some of the assets that I would personally consider investing my money into if I was investing £30,000 in my 30s. Now, to make it a bit fun, I'm going to again read actually from our book here, Financial Joy. I'm going to show you page 205 in the book, has a very neat table. So I want to just walk through those various asset classes. And the goal essentially being that I explain to you what asset classes I'd consider and what role these assets play in a portfolio if you needed to invest, say, £30,000 for yourself, right? So the first asset class I would consider investing my 30 grand in my 30s is in stocks. Now, stocks play the role of capital appreciation in a portfolio. By that I mean you give yourself one of the biggest opportunities for your money to grow and outpace inflation over time. So that's the first area I'd consider. We've made numerous videos about how to go about investing in stock. And as I mentioned earlier, there are investment plans that you could consider. So I will link below as well to various videos that we've already made previously that you can consider, as well as the resources I mentioned earlier. So the first is stocks. The second is bonds. Now, bonds are much lower risk and much better as time passes. Bonds play the role of capital preservation in a portfolio and also plays the role of being a deflation hedge in a portfolio. So deflation's working the other way compared to inflation, okay? Working in the opposite direction. So bonds plays that role in that it essentially helps to hedge that risk in effect over time. The third asset class I'd consider is property or real estate. So properties quite similar in a way to stocks in a way, play the role of capital appreciation over time in that it can appreciate over time as well as offer you an income potentially over time. But if you don't really want to get involved in investing in property and actually owning physical property, you can get involved in real estate investment trusts. But these will require quite a lot of research and just making sure that, the timing, by that I mean the period over which you're investing in those sort of assets, it makes sense to be going into real estate investment trusts. We did a very detailed video related to REITs and how they work and what you might want to consider. The main reason people go into them is for dividends. I'll link to that video below as well as above for you to head over and check it out if you wanted to. But real estate offers you capital appreciation as well as a diversification property in that helps to offer another alternative to investing in stocks, for example. The fourth area I'd consider is commodities. Here I'm talking about commodities, other forms of commodities that you might want to consider. I'll talk about some more in a moment. But commodities help to offer you an inflation hedge as well as diversification as a property in a portfolio. The fifth and sixth are quite related in that they are index fund and exchange traded funds. Index funds and ETFs, number 5 and 6 on the list, help to offer you capital appreciation in that your money is well diversified, but also gives you that potential for money to work for you over time. We talk a lot about investing in these funds, and in my personal opinion, it's a very good way for you to invest your money because you can have it as a set and forget way without necessarily needing to pick stocks. Though you can expose a very small proportion of your money to picking stocks, more for the learning and for the fun. But if you really want to not worry about your money, investing in these trackers, index funds and exchange traded funds is a great way to go in order to allow your money to be diversified and work for you over time. And the final area I'd consider is precious metals. So here I'm talking about the likes of gold, for example. Again, you're not really putting a lot of your money into these areas. Gold acts as an inflation hedge over time and also works to preserve capital. Yeah, so for a lot of people, it's a kind of doomsday investment. But what tends to happen is that I mentioned earlier the sort of asset allocations you might want to consider, 80-20, for example, stocks to bonds, for example. If you're then investing in assets that mimic stocks or mimic bonds or have similar risk profiles, you might then want to consider using a proportion of those allocations to equities and bonds to explore investing in some of these areas. So for example, one common question I get from people is, hey, what about cryptocurrencies, for example, random things like that? I am someone who thinks very carefully about risk and return and the variability between them. So I'd personally say that, we've always maintained this message that, you really want to, for very, very risky asset classes, you really want to try to keep a cap on how much you're putting from a portfolio perspective. I personally would put a maximum of 1%, that's 1%, into such super high risk areas. Not a recommendation to you at all, just talking about it because I know people will inevitably comment below and say, what about these areas? And then one area I haven't talked about really is business, almost carving out a proportion of your money to be invested in business. But this will really depend on what your goals are specifically. I see the idea of being enterprising and applying our skill sets in different ways into different, creative opportunities as a really important way to maybe explore something along the side whilst you do your day job. Personally, I like the idea of exploring around 5% of my net income into opportunities that have that potential to grow even more. Could be a side hustle, could be a business, and so on. But overall, what I'm really saying with today's video is that, for you to invest £30,000, it really comes down ultimately to the vision you have for your life and sort of goals you have for your life over, say, the next 5 to 10 years. For some of you, it might just be you want to get onto the property ladder, so your 30K will just go straight into the deposit for your property after obviously putting together an emergency fund. For others, it might be that you've actually got past that stage and now your journey is that you're trying to accumulate wealth over time, in which case allocating your money into some of those various asset classes I talked about will be a big consideration for you. But I want to hear from you guys in the comments below. How would you go about investing £30,000? Jump in the comments and let me know what sort of things would you consider investing that money into. Oh, and I should mention finally, one thing I haven't talked about, although I assume as a default, is that you would want to invest some of your money into ongoing education. Yeah, so it could be that you invest into books, it could be that you invest into watching YouTube videos for free, or it could be that you invest into joining niche groups that mean that you're learning from other people. Whatever it is, ongoing learning is a very important part of your future wealth journey, as well as a very important part of what will lead to future career outcomes and so on over time. So I'm just mentioning that as a default, but I'm assuming you're obviously investing a bit more into your development as time passes. Guys, I want to hear from you in the comments, like I said earlier. Jump in the comments and let me know, what you would invest £30,000 into and why. Other than that, thank you guys so much for watching today's video. If you really enjoyed it, please definitely make sure you hit the like button, and don't forget to subscribe to the channel if the work we do here at The Humble Penny has been helping you so far. Thank you guys so much for watching today's video, and as always, in all things, be thankful and seek joy. Take care and bye for now.